Hi everybody, wanted to talk to you today about oil and some of the different themes and durations, the duration of those themes that are coming in and out of view in the immediate future and in the incoming months as well. Okay, so what I've got here in front of me is the chart of Brent oil here. Okay, so this will often appear as UK oil in your CFD markets. And really, what we've seen is this recovery from these lows, obviously from the pandemic, and we've pushed on higher as well. I'm just going to try and get a little marker here so I can. There we go. Okay, so obviously pushed on higher. We had this little pullback here, but since then we've pushed on out of this area here. This was back in I think it was about October, if I'm not mistaken. A quick look, just double check that. Yeah, end of October, beginning of November really was where we saw the rally start to take shape. This has been driven by OPEC cutting output and the idea of the reflation trade and the fact that things aren't going to be as bad as everyone believed they would be. All right, so that's obviously led it from these lows, but then of late you can see it's steepened again. We've had another leg higher from about $54, $55. We've pushed on again another $10. Now, this has been driven, I think, more by the reflation trade that we've seen, which has led to predictions such as this one that you see here on the screen from JP Morgan and Goldman Sachs. And they're looking really for something which we've been talking about in previous pieces as well, a lack of supply in the market, and that we're going to be short of oil before we don't need it anymore. So this idea that the incentive for more investment and increasing production in oil, obviously with this green push that we're seeing now, that's going to lead to a shortage of fuel. And there's probably been a bit of meat put on the bone by what's happened in America here. Oh, let me just change that. But what's happened in the US as well? We've seen obviously this the price push up towards $60. This is talking about West Texas Intermediate, so the CL or US oil, because a lot of production has been shut in again. Now, that's an interesting theme, and I do think that the price for oil overall is likely to move higher. And this super cycle as well that they're talking about is something that it's of a lot of interest, definitely. But we still got to be aware of the fact there's a lot of production that's offline, and this oil price rally, as you can see here, points to what points to sort of, again, more easing of these output cuts from OPEC, and we are back at this price that you can see just around here. Now, if you've got a decent memory, remember this area here. This was when Russia and Saudi Arabia's real conflict, obviously we're back there now. The real conflict came in between them, where Russia wants to increase their market share, potentially at the expense of a higher per barrel price, whereas Saudi Arabia favours the reduction of output to maintain higher prices. So there's sort of differing views there, and that obviously caused a big problem that led to the massive oil crash back in which started back in March last year, fueled by the pandemic as well. And now we're seeing everyone getting onto the side of being very bullish oil, without really factoring in this idea that a lot of output is still able to come back in, and I think we are susceptible to a drop in that. Demand can fall short of the projections, and there's a lot of production due to come back on, and I think there's going to be a lot of competition now from Russia in particular, but also other OPEC members who are going to look to increase their output and try and grab the market share before the US shale industry can really recover. So we've seen here ING have updated, alongside many others, their price forecast. They're seeing as well much higher oil prices, and they're saying obviously here, as you can see, they want to do everything possible to avoid a repeat 1 year on from the March 2020 meeting, where Russia again are going to put the pressure on. So it's a real thing to be watching for. I do think that perhaps this is the market's getting a little bit ahead of itself here with these oil prices, and we will be susceptible to to a pullback here, although the longer term trend and the duration of the trade is more likely to see higher oil prices in the future for the reasons we mentioned before. Timing is another matter. I already had a nibble, if I'm honest. Got my fingers burnt there, but I will be watching to see if this production wars basically come back to haunt OPEC and the oil market in the coming weeks.